Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, 6/14, 5:48 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with take 3 of the Revere Daily Market Insight video. We continue to have miserable failures with hardware and software, and this one hopefully will be up to the quality standards that you expect, as a lot of you have made it clear about how unacceptable last 2 nights' videos were. Let's dive into it. Market state, we're in an uptrend. You can see over here on the trend gauge, market leaders acting just fine. And then the 5 major indexes across the 3 time frames that we track. That is the short-term 21-day moving average, the medium-term 50-day moving average, the long-term 200-day moving average, all of them trending nicely above. NASDAQ 100, as we mentioned last night, extremely extended by norms from the 21-day and 50-day, but it does not care about how extended it is. And we'll get into that in a minute when we discuss what just happened. So the FOMC today did not raise interest rates, as was expected, but they also said we're planning on doing 2 more raises before the end of the year. The market was not expecting that, and there was a harsh sell-off after that. We added to our hedge when that happened, but by the end of the day, the NASDAQ 100 had recovered most of what it gave up on the sell-off. The S&P 500 finished green, and most of the other indexes closed to varying degrees off of their lows. All in all, I'm going to call it a win for the bulls as leading stocks continue to lead, and that's about all you can ask for when you're in a bull market. And the healthiest market is a bull market with growth leaders taking the baton and being at the front of the pack. So by the end of the day today, here's what we had. RG8, just fine in the morning. After the Fed, small and mid turned south, didn't recover the losses, but are finished well off the lows. RG8, our 8 ETF growth composite, down 0.6%. S&P up 0.1%. NASDAQ 100 is just a beast, up 0.73. Dow hit hard by United Healthcare, the by far the most expensive stock in there, and it being a price weighted index, the Dow had no chance today, down 0.7%. Mid caps down 0.6. Russell 2000, small caps down 1.2. Global 60/40 up 0.15 today. In-house GROTECTION up 0.13. NVIDIA and AMD leading the way for us today. So we'll go through the tail of the tape, and it's Weekly Chart Wednesday, and we will hit the weekly charts of everything that we own in-house. Let's get right into it. We'll start with the S&P 500. Back to the daily chart, you can see an outside day, meaning a higher high and a higher low. In the morning, trending nicely higher. Right before lunchtime, we said that's far enough, and we started selling off, profit taking into the 2 o'clock announcement, and you can see the initial reaction, harsh and swift. And then we tested the bottom here at 43.38 and had a nice bounce higher, back up to 43.82, just 9 points shy of highs of the day, before making lower highs and lower lows into the close, but a pretty decent close with the S&P finishing green. NASDAQ 100, king of the indexes, as I said, doesn't care that it's extended, 10.6% above the 50-day, 5.1 above the 21-day. Semiconductors continue to be a beast. NVIDIA making higher highs again after its massive gap up on earnings a few weeks back. It had a really nice consolidation. We'll look at that momentarily, and you can see on the weekly charts how a bunch of these leaders had great runs, consolidating for a couple of weeks, and now resuming their runs, which is what you expect in a bull market. You would expect any consolidation to resolve to the upside, which as of right now is the primary trend across all 3 time frames. Here's the Dow taking the hit, still closed at the top of its range, bounced off the ADMA, no chart damage done, right near that 34,000 key level. Mid caps, no damage done here either. Didn't even touch the ADMA, but a higher high and a higher low. And if you look in the 5 minute, didn't recover as nicely as the Nasdaq and the S&P did. Same situation with IWM. Recovery, but not what we'd like to see. But all it did is bounce off of the ADMA. You can't complain when a chart, an ETF, an index, or a stock is trending above the ADMA and continues to find that for support. That's the ultra short term moving average that we use. And when the bulls are running, they respect that. Let's go to the dollar as this initially gapped down on the day, had a spike higher after the FOMC, but you can see how it closed. How did that carry over to precious metals? Well, gold started pretty strong, but finished near the lows of the day. Lots happened after 2 o'clock on just about every chart that you'll look at today, and that's all because of our buddy Jerome. But I'll tell you though, and you don't, anything you take from them, you got to take with a grain of salt. But their prediction is positive GDP on Q3 and Q4 as of right now. GX gold stocks gapped up, faded after 2 p.m. Silver positive on the day, so holding the 21-day moving average, whereas gold and gold stocks cannot get back above their 200-day moving average. Bitcoin very tight again for the third day in a row. Let's flip the bonds now. The BND broad bond index up positive on the day. There was some divergence. Lower duration bonds, the price was down, so yield slightly up. As the duration went higher, the 10-year and especially the 30-year price was higher, meaning interest rates dropping. Here's your TLT. Obeying, can't get above this declining 21, again up 0.80 on the day. We'll see how it reacted on the 5 here. Really reclaimed most of the losses by the end of the day. TYX, the 30-year yield down on the day as expected with price higher. For TLT, TNX, 0 TNX, the 10-year down 1% on the day. Looks like it's trying to put in a cup and handle here. That would not be a positive for stocks. Although, as you know, interest selling bonds will drive the price lower and the yield higher if you want to sell bonds to move money into stocks. And been reading a lot about that going on lately. Oh, what's left? Nothing. Let's go to the tail of the tape. You can pause this. I'll hit the highlights. I pretty much covered all of the news. Fear and greed at an 81. VIX, I didn't show the VIX. 0 VIX, down on the day, even down and stayed down while the market was rallying. In fact, it came off, or while the market was pulling back, the VIX came off too. So this was the bets were put on for protection on the VIX back in on Monday and taken off. It looks like after the report today at 2 o'clock. So back to the tail of the tape here. Staying in range, we're positive. One consolidation day after 2 days up and a 14-day rally. That's 14 days above the 21 EMA, 13 above the 8 EMA. Once you get up near 20, that's the highest we've seen over the last 6 to 9 months before break-in or at least a test, an undercut and reclaim of the 21. You can see here the strong sectors. No surprise that semiconductors are in there. IHI, medical devices, had a strong day. As the reason why UNH was down, it reported more elective surgeries that were put off because of COVID, and that sparked the medical devices higher. On the downside, KRE got hit after the Fed, oil's down, retail down, biotech down. The only change we made in-house was adding to our hedge on that initial move down. Our hedge is underwater now. We'll look to get off of that as long as we see follow-through strength. At least half of it anyway is the reason we put the second half on, was for protection on the initial move down in the indexes. But bottom line on the day, FOMC hawkish pause was no match for the S&P and especially the NASDAQ 100. Them closing green is a win for the bulls from where I'm sitting. All right, let's go to, since it's a weekly chart Wednesday, let's go through the weekly charts of the 21 over 21, and you'll see a lot of nice charts, and you'll see a lot of rest. As I said, the best of the best continue to obey the 21. Even better if you're obeying the ADMA. Microsoft looking good, continuing its move after its earnings. Same thing with Meta. NVIDIA, it just continues to be a beast. Here's your gap up. That was all the way back on 525 now, broke out back above 400 yesterday, higher high. This is the exact action that you want to see when a monster gap happens after earnings. Uber continues its move up, 2 days of a pullback after a 3-day advance. AMD also acting great, bouncing off the ADMA. I'm showing daily charts, not weekly charts. What is wrong with me? All right, let's reboot this. Back to Microsoft. And what you're going to see here is tight action over the last 5 weeks. A lot of them a move up after an earnings report, continuing higher in a tight range with an upward bias and positive relative strength, like Microsoft, like Meta. There's NVIDIA. You can see the 3 weeks tight after the move up, and then the move out today. Again, a consolidation resolving in the price of the primary trend, which is what you expect. Uber climbing higher. AMD, great stuff here. Their AI chips are, they're saying as good as NVIDIA, as the market will ultimately decide. Chipotle, tight action, losing relative strength, though. If we had to sell something out and add, we would, Chipotle would be the first one out of the portfolio if we needed the cash. Dynatrace continues, nice move higher. Tesla, also a beast, did break its daily 13-day consecutive up days today. However, as it finished down on the day by 0.74%, but still up 5.1% on the week. Google, tight action after its move up, losing relative strength though. Chat continues to be a great performer since we added this to the portfolio. NRGU, we're just kind of scouting for things that are putting bottoming bases, assuming that sector rotation will take place at some point, and we're looking for it, and NRGU is a good broad leveraged way to play it. Ferrari proving there's no recession for the uber wealthy, making a higher high. DraftKings, choppy, but with an upward bias. Intuitive Surgical broke out today, along with that medical device sector. Celsius continues to make higher highs. Supermicro, big winner this year, inside week. Elf, don't like how it's acting. Distribution yesterday, pulled back more today as it hit the declining ADMA on the daily. Live Nation making higher highs. Palantir, another beast that we're not in. But look at the volume on this. We're looking to sneak into this on a pullback. Toll Brothers, home builders across the board continue to act well. Monday, nice consolidation at the top of the base. Palo Alto, the leader in cybersecurity, and Shack, not in the 2121, but what we would add if we replace CMG with another restaurant stock. And that is going to wrap it up for the day. I hope this recording is clear. As always, reach out to me if you like the concept of active participation in an uptrend in the leading stocks and downside participation in an unhealthy market. We protected capital in 2022 during the bear market so that we could take advantage of it now with dry powder when the market's acting better. I know there were a lot of times over the past 18 months when people figured that bear would never end, but we've had good action over the past few weeks, and we'll take our cues from the market. You want info on this, or you're interested in becoming a client, either email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. And with that, I will wrap up Wednesday's edition, the June 14th edition of the Revere Market Insight video. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.